Hey, what's up, everybody? Ralph here. So today's topic, I want to talk about does closing your credit cards hurt your credit score? So if you're someone that's thinking about closing your credit card, probably the main reason is probably you think you struggle with managing debt. You probably had a high balance and you were struggling with making payments on that, and then you eventually was able to pay off that credit card, and you're like, you know what? In order to protect myself, I need to just close this credit card, which a lot of people do, just to protect themselves. But before you do that, you want to make sure you understand the consequences of doing that and how that can affect your score and going in the future. So let's say you want to apply for a mortgage or you want to get a finance on a car. You need to understand how that can affect your credit score going forward. So before you close that credit card, you need to understand what impacts your credit score. All right, so the most important factors that when it comes to scoring is payment history. Obviously, making payments on your credit card, that accounts for about 35% of your credit score, and your credit utilization is 30%. So for those that don't know what credit utilization is, it's pretty much, if let's say you have $10,000 credit limit on a credit card, and you have a $5,000 balance. All right, so that ratio would be 50%. All right, so you need to make sure you keep that low. So the lower that utilization rate is, the higher your credit score is. All right, so if you're thinking about closing your credit score, you need to understand how that impacts. So let's say you have two credit cards, right? Both at $5,000. So that's a total of $10,000 credit limit. And you decide to cancel one of them, right? So you're gonna go from 10,000 to 5,000. All right, you want to make sure, and you need to understand, as you're using that credit card, the more you use, the higher that ratio is going to go up. So if you're going to close one of those credit cards, you're just going to, impact how your credit utilization going forward. So you want to make sure you keep a high credit limit. Another thing that impacts your credit score is credit history. All right. So lenders like to see that you've had credit for a long time. Right. They trust someone that's had credit, that's managed credit for like 10 years, as opposed to someone that's just managed credit for like 1 year. All right, so the longer your credit history, the better your score is going to be. So let's say you had those credit cards for like 10 years, and then you just removed one. All right, so that's 10 years of credit history that's going to be gone. That's going to affect your credit score going forward. Now, if you cancel, you decide to close that credit card, you're moving both. You're affecting your credit utilization, which is 30%, and then you're also affecting your credit history, which is another 15%. So that's 45%. Credit, that is the impact on your credit score. So you want to make sure you understand that. Now, if you do decide to do that, obviously it's going to hit your, it's going to affect your credit score. It's going to bring your credit score down for like a few months, but you can easily get it back up if you make sure you're doing the things that you want to do. You need to do with other credits, like if you're making payments on another credit card, or you're paying on a mortgage, or whatever you're doing, or you have a loan on a car. As long as you're making payments on that, your score will eventually go back up. But initially, you will take a hit. All right, so now before you do that, before you decide to cancel that credit card, you want to make sure you understand why you're doing it. So let's say maybe that credit card has a high annual fee and you want to get rid of that. Or maybe let's say one of those credit cards have a high interest rate and you plan on acquiring debt, or you decide you plan on keeping a balance on that credit card in the future. You may want to get rid of that credit card because you don't want to have to pay high interest fees. Also, maybe you're bad at managing your debt. These are good reasons why you probably want to close it, but you need to understand before you do that how it can affect your score going forward. Because remember, that's 45% of your scoring for your credit score. So that's the credit utilization rate, and then the payment, the credit length. That's 45%. So you want to make sure you understand how that affects your credit score going forward. All right. So before you do that, make sure you get it, you understand. And if you're applying for credit, like let's say you're applying for credit in a couple of months, you don't want to close that yet. If you're going for a purchase, if you're going to get a mortgage on a property, make sure you get that house first. And then if you want to close that credit card, do that. Or if you're trying to purchase a vehicle and you're going to finance it, you want to make sure you get the vehicle or the house first. And then if you want to close that credit card, go and do that. But just understand that if you do close a credit card, it's gonna affect you. It's gonna bring your score down, and it'll go back up in a couple of months once you start making payments on other items. So that's pretty much it. If you have any questions, make sure to leave a comment down below, like the video, and then I'll talk to you guys later. All right, have a good one. Later.